So what does it mean now that Fitch has downgraded U.S. debt? I'm Susan Lee. I've anchored the three largest financial capitals in the world on the three largest business channels on the planet. Fitch has now downgraded U.S. debt, joining Standard & Poor's. So that means for going from AAA down to AA+. So it's like a Major League Baseball team being downgraded and demoted to the minor leagues. Fitch says they made this decision because of high U.S. debt and the lack of governance that they see in Washington, D.C. They say that the rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance relative to AA and AAA rated peers over the last 2 decades that has manifested in repeated debt limit standoffs and last-minute resolutions. And they say that in their view, there is a steady deterioration and the lack of governance in Washington, D.C. over the last 2 decades. Remember, Fitch had already put the U.S. credit rating on watch back in May when Democrats and Republicans were wrangling to raise the debt ceiling, and they pushed very close to that drop dead deadline. Now, you can imagine the Treasury Secretary Janet Yellen, she says that I strongly disagree with Fitch Ratings' decision. The change by Fitch Ratings announced today is arbitrary and based on outdated data. And she's right. She adds that Fitch's decision does not change when Americans, investors, and people all around the world already know that Treasury securities remain the world's preeminent safe and liquid asset, and that the American economy is fundamentally strong. Now, you haven't seen much reaction in the markets. The dollar hasn't weakened. You saw a slight uptick when it comes to Treasury yield. Remember that the U.S. is in a place of strength. The U.S. dollar is the world's reserve currency. But there is a high debt burden here in the U.S., 6.5% deficit to GDP in 2023. So think about it, 6.5% of $21 trillion. And that's why Fitch says that they made this decision. Now, the White House would argue that politics is playing into this because, according to them, the Fitch model actually decreased under President Trump, increased under President Biden, so it defies logic in their view. Remember that we've been here before. Standard & Poor's shook the markets in the world back in 2011 during that debt ceiling debate when they were the first to ever downgrade U.S. debt from the AAA down to only AA in their view. So only Moody's now still rates U.S. debt as AAA.